All right, let's talk about Abbott. When a healthcare giant like this puts out its quarterly numbers, it's way more than just a spreadsheet. It's really a pulse check on the health of the economy and where medical tech is headed. So, we're going to break down their Q3 results and figure out what's really going on behind the reputation as a consistent performer. So, you hear this from the CEO, Robert Ford. Consistent, high-quality performance. That sounds great, right? But what does that actually look like in dollars and cents? Let's get into the actual numbers. First up, the big one, the top line number. We are talking almost $11.4 billion in worldwide sales for a single quarter. That is a massive figure, and it really sets the stage for everything else. And then you've got the bottom line, $1.30 in adjusted diluted earnings per share. Now, if you're not familiar, think of this as the company's profit for each single share of stock out there. It's a huge indicator of profitability. So right off the bat, the headline numbers look really strong. So here's how we're going to break this all down. First, we'll hit the Q3 scorecard. Then we'll pop the hood and look at what's really driving their growth. After that, we'll get into the incredible tech they're creating that's saving lives, touch on the challenges they're facing, and finally look at what's on the horizon. Okay, let's jump right into that Q3 scorecard. To really understand the health of the business, to get past those big headlines, there's one key term you really need to know.
And that term is organic sales growth. Now, it might sound a little jargony, but it's super important. It basically strips out all the noise, things like wild currency swings or if they bought or sold off a part of the company. It gives you a much cleaner look at how the core business is actually doing on its own.
And when you look at that cleaner number, you get 7.5% growth for their core business. Now, this shows that if you ignore the drop in COVID test sales, which, let's be honest, everyone expected, the rest of the company is growing at a really, really healthy clip. So that leads to the next question. Where is that 7.5% growth actually coming from? What's the secret sauce? Well, it's time to look inside Abbott's growth engine. This chart breaks it all down for us. And, whoa, look at that. Medical devices is the big kahuna here, making up almost half of the company's entire sales. Then you've got diagnostics, nutrition, and pharmaceuticals rounding things out. It's pretty clear they've got their hands in a lot of different baskets, which is a classic strategy for staying stable. But this is where it gets really interesting. Medical devices isn't just the biggest piece of the pie, it's also growing like a weed. We're talking 12.5% organic growth. That is just massive. It's absolutely blowing the other divisions out of the water. So the real question is, what's fueling that fire? Well, it really boils down to innovation. We're talking about taking incredible, cutting-edge science and turning it into real-world products that, actually change and save people's lives. Let's look at a couple of examples that are making a huge difference. So first up, we have Abbott's Navigator system. And this thing is a really big deal. It represents a major shift in how doctors can treat serious heart conditions, giving patients options that are way less invasive than what they had before. So what it is a TAVI system. Think of it like this. Instead of cracking someone's chest open for major surgery, doctors can use this to replace a faulty heart valve. The huge news this quarter is that it got expanded approval in Europe, meaning it can now be used for a much, much wider group of patients, people who are at low or even intermediate risk for surgery. That is an absolute game changer. And they're not stopping there. Here's another key product, the TriClip device. It's kind of a similar story, really. It's another brilliant, minimally invasive solution for a complex heart problem. But this time, it's for a leaky heart valve. Yeah, this is literally the first device of its kind to treat this specific condition. And they've had a great quarter with it, getting the green light over in Japan, and, just as important, getting a big thumbs up in the new guidelines from the European Society of Cardiology. And when those big medical societies officially back a new technology, that's huge for getting doctors everywhere to start using it. Okay, so obviously, it's not all sunshine and roses, right? No company has a perfect quarter. To get the whole story, we have to look at the challenges, the headwinds that they're sailing into right now. And the biggest headwind, and this is no surprise to anyone, is the cliff dive in COVID-19 test sales. I mean, just look at these numbers. From $265 million this time last year, all the way down to just $69 million this quarter. That is a massive drop, and it's pretty much the whole reason why the diagnostics division looks like it's shrinking on paper. And on top of that, the diagnostics business also hit some turbulence over in China. The report mentions these volume-based procurement programs, which is basically a fancy way of saying the government is buying in huge bulk quantities and driving prices way down. It's just a clear reminder that when you're a global company, you have to deal with these really complex local challenges. So you've got this amazing growth on one side, but you've also got some pretty serious headwinds on the other. What does that mean for the future? Let's take a look at what they're forecasting and some of the long-term signs of stability. Well, despite those challenges, Abbott is sticking to its guns. They're holding firm on their full-year forecast. In fact, they even narrowed their profit per share forecast. And usually when a company narrows that range, it's a sign of confidence. It means they're pretty sure they're going to land right where they want to be. And if you want to talk about long-term stability, check out this number, 53. What is that? That is how many years in a row Abbott has increased its dividend payout to its shareholders. 53 consecutive years. That is just an incredible track record of financial strength. And just to put that into perspective, that 53-year streak makes Abbott a dividend aristocrat. It's the super exclusive club of companies that have consistently raised their dividend for over a quarter century. Being in that group says a whole lot about just how resilient their business model is. So what's the bottom line? It seems like Abbott's innovation engine, particularly in medical devices, is just firing on all cylinders, and it's powerful enough to overcome the headwinds they're facing elsewhere. This leaves us with a final question to chew on. With that pipeline pumping out new tech, can Abbott prove that this kind of relentless, life-changing innovation is truly the best medicine for long-term growth?